Good day to all Inderes TV listeners and viewers. Tecnotree publishes Q3 results today, and on this video we have the CEO Padma Ravichander and CFO Indiresh Vivekananda as guests. Welcome.
Thank you.
Thank you, Ronnie. Good evening. How are you?
I'm good. So you could start off with telling what were the highlights of Tecnotree's Q3.
Okay, I'll go first and maybe Indiresh can add if I miss anything. I think we had a record growth in order intake coupled with very strong deliveries in this quarter, busy quarter for Tecnotree, and that definitely ensures a stable growth going forward. Order intake exceptionally was record, 31 million this quarter alone, the highest order book in a quarter. And the order backlog is also 78 million, which is definitely one of the highest the company has ever foreseen. Most of the orders came from APAC and MEA, and this time the orders also included in them requirements for fintech, moments, and our AI/ML sensor fabric offering. So we are seeing the investments that we have made in these initiatives in terms of growth engines are also now taking off in the new orders. Our revenue grew 7.4%. I think it's quite a good growth to 21.4 million, a 9% year-to-date growth. It's in line with the best in the market, I would say. A lot of the revenue came from licenses and a good growth in our ARR revenue. In terms of profitability, the company has a product-led approach, which is the transformation journey that we've been steering for the last, I would say, 6-7 years, and it has matured really well as a product company, such that we were able to give an outstanding EBIT result of 6.2 versus 5 million last year, same time, a 23% growth and 39% overall EBIT has been up. This growth is also fueled by 22% of the profitability coming from ARR revenue. While our revenue has been growing at about 7.4%, our OPEX has been only growing at about 2%. And that's definitely telling you that we have highly productized our stack and we are continuing to reap the investments we have made in R&D through better profitability and better accuracy and predictability of our delivery. The areas that were, a little concerning definitely was the impact of financial situation in the market, especially currency exchange. We suffered a higher cost of currency, 3 million compared to 1.3 million last year. And our net income reduced slightly, not too much, 3.2 million versus 3.4 million of last year. And that majority of that comes from the impact of financial management. And the other area is lower cash collection. Here, definitely working in emerging markets, the geopolitical situation, the currency fluctuation, high interest rates, and higher inflationary pressures have definitely affected the collection process. But we are doing rapid business transformation of our business to stabilize the cash collection. And I'll speak to that a little bit later in our interview.
So yeah, you touched upon the cash flow that was quite weak in the Q3. How confident are you that you can improve it in Q4 and next year?
Maybe Indiresh, you want to talk a little bit about cash?
Yeah. Roni, thank you, Padma. Thank you, Roni. As we know that the Tecnotree's business has a seasonality, both in revenue and also as on the cash. No 2 quarters had a similar cash collections in the history of the company. While we talk about the scape, I suggest that we also look at over a longer period. If we look at the longer period for the first 9 months of last year versus current 9 months, we have almost collected same or similar amount in both these first 9 months. So that is what gives us a confidence that we are on track Yes, this quarter we collected a little bit lesser due to certain activities that happen in due to geopolitical situation in certain geographies and hyperinflation in certain economies. But overall, we are confident that we are on the right track. This quarter was a blip. We'll move on and get a normal cash higher in the next quarters.
You talked about business model transformation in your webcast that should allow better cash collections in the future. Can you tell more about this transformation?
Yes, I can, Ronnie. Let me just lay a little bit of a background on what we're challenged with. If you look at our current model, and this is the model that traditional CSPs follow, you know, the communication industry is a veteran industry. It's a essential service, but the industry has been in existence for more than 50 years and has very traditional methods of automation and IT practices. So typically, there is very long delivery cycles for the projects. Each project delivery and go live sometimes takes as much as 12 to 24 months. Therefore, the cash collection comes with go live. So even though you receive a purchase order, the actual big monies come in later on in the project usually. There's a lot of integration and customization that's required. And typically, CSPs have to have a higher capital outlay to do these digital transformation projects, and therefore their ability to scale the model is low, and the cost of delivery is also quite significant. So looking at these challenges, what we have been consistently doing, and it's not something that we started this quarter, we started this journey about 2 to 3 years ago after we launched our digital stack to take a very product-led delivery approach. If you look at our stack today, we have 250 use cases already, and these are very relevant use cases to all the markets and all the 30, 40 active customers we are today serving on the digital stack. And out of that, more than 75% of all those use cases are configurable. You can show a demo and immediately configure the customer to start using many of these digital use cases to run their business. And quarter on quarter, we have been enriching the stack with new features. This quarter alone, we had more than 350 features added to the stack. And the most important thing is, as a strategy, we followed the TM Forum standards. Today, we are #1 in the world with 59 standard APIs, which means our ability to integrate our stack in a customer environment with network integrations or northbound integrations to their other applications are highly standardized and very quick to implement. So with these strategic maneuvers and differentiating capabilities on our stack, and now we have added the AI/ML capability on the stack, which gives us a very differentiated entry into the market. And we are also using AI/ML to generate our own code within the company and develop our own features in the company. This has led to high levels of productization, which means that in the new model, we demo the product and we immediately go live. Typically, the go live used to take 12 to 24 months. We are shortening the period of go live to 6 months. So we collect the purchase order, and 6 months we integrate the stack into their environment, and we go live with the standard 250 features configured for their environment. And then we move into what is called a DevOps model, where we have a customer success team that is continuously improving and adding new features and new journeys onto the stack in a monthly recurring revenue model for the customer. What this does for the customer is that it is a low upfront CapEx and a higher OpEx model year on year. It also ensures that they go live faster and become digital sooner, and that they are able to bring in new services rapidly with the DevOps model and the customer success model just in time as the market and the business requires them to make the change. And most of the CSPs today want to become from telcos to techcos, and having this capability, digital capability, and the ability to launch new services makes them technologically more advanced. What does this mean to Tecnotree? Definitely, we are going live faster, which means we can do more projects deliver more projects than what we have been delivering till now, which means we are increasing our revenue capability. Where we were doing 6 and 8 and 10 and 11 projects, we can do much, much more because we are going faster with a very productized approach. And the customers are liking it. Why? Because it's highly standards driven and it's conforms to TM Forum standards, which is their industry standard for development and delivery. And more importantly, we are also able to reduce the R&D costs because of the productization, which means we are improving our profitability. And we are stabilizing, most importantly, we are stabilizing the cash inflow, because on a monthly recurring revenue, they pay the upfront license cost in the first 6 months and go live. And after that, on a monthly plan, they improve the stack and they operate the stack, which means we can expect monthly cash revenue coming in. And it's an OpEx-led model. So it would stabilize our cash intake. And this is the transformation journey we started about 3 years ago. It's an educational process. It was first an internal transformation process and an ongoing process for Tecnotree. And it was also a transformational process of the business with the customer. And I think it has led to good results and it will continue to yield better as we go forward.
You received only around 14 million euros of 43 million euros you were supposed to receive from debentures, and you announced that part of the debentures will be transferred to a new investment consortium. Could you elaborate on this, and when do you expect to receive the full amount?
Okay, I can take this first. We have received legally binding interest from a consortium of shareholders consisting of Royal Front Investment Group, Lumina Sun Holding, led by Fitzroy Investments Limited, for 20 million euros. We are working with the parties closely to conclude the definitive agreement in the next 15 days. And once that is done, probably we'll have more visibility to share more details on this particular deal. Padma, you want to add anything about the
Yeah, just one thing. I'm really delighted that this new consortium also includes one of our key existing customers and partners with a very proven track record, and I welcome their involvement in the growth strategy of the company. So I'm quite delighted in the strength of this new consortium that has come forward, for sure.
You have announced a lot of new deals in this fall. Are these orders you have announced been mainly license-based, or are they delivered with ARR model? Could you kind of describe the mix? And
yes.
They include recurring revenue, for example, the deal from yesterday.
Yes. So definitely the new deals that we are announcing have digital transformation requirements coming from customers. They definitely include license revenue, and they also include monthly recurring revenue in the model that I described. Not all the deals are structured that way because some customers are still in the traditional model. But very quickly, we hope to transform them as we show our product, how quickly they can go live and how quickly they can adopt the different agile way of working that can improve and give them better business results. Therefore, I think that is key. The other important significant things that the new order is doing, it's changing our dependency on traditional large customers we had prior to, let's say, 2-3 years ago. Our dependency on our 2 large customers were more than 85%. And now with the newer wins, I would say it's less than 50%. So we've also changed the mix of revenue coming in from that perspective.
How has your expansion to new emerged markets and R&D investments in general developed? Could you give some concrete examples of these?
So we acquired Cognitive Scale last year. And to date, I would say I'm really proud to say we have won more than 2 large orders, which are telco-based, 2-3 large orders right now that are telco-based, that are adopting our sensor fabric. We are also influencing the TM Forum standards for Profile of One for customer experience. We are maturing their model for autonomous AI along with TM Forum and creating new standards for the telecom industry. I do not know if you know, we are ranked number 4 in the world for our AI/ML autonomous AI capability for telcos with our 114 patents. Just behind Microsoft, Amazon, and Google. We are ahead of OpenAI and NVIDIA in terms of our AI/ML capability. So with the strong capability of our AI/ML integrated digital stack, we definitely have a very competitive advantage compared to some of the other providers in the market.
One question we received from our forum, how is the competition environment at the moment? Who are you competing mostly with, and what separates Tecnotree from competition?
As I explained, I think we've been steadily investing in the R&D effort, the acquisition of cognitive scale, future strategic acquisitions similar to that is definitely in our intent as we go forward. And I believe that our TM Forum standards, being a diamond badge holder, not only just adhering to the standards, actually implementing those APIs. We have the largest number of use cases that have been implemented as per standard, and we won an award for that, and in terms of real-world APIs. And we continuously give feedback to TM Forum in terms of how these applications are working in the industry. And I think some of these strategic differentiators are investments in B2B2C type experiences on our platform for ecosystem play, our fintech integration with a digital wallet Diva, our cloud offering that we have taken to market in North America, and the profile of one that we have created for customer experience with our AI/ML sensor fabric are all key differentiators that are having a resounding success in the market.
You adjusted your guidance for this year. What is the new guidance and what was behind this adjustment?
I'll take this question. Roni, as a good accounting company, as the year comes to a closure, we'll have more and more clarity on our numbers and where we are heading. In the year beginning, we give a larger range, a broader range of guidance. And as we come closer and closer, we tend to narrow it to a more specific range. For example, revenue, earlier we had given from 7 to 15%. We narrowed it down now to 9 to 13%. Similarly, on the EBIT, we have, looking at the performance, what we had done in the first 3 quarters. Earlier, we had given a range of 10 to 20%. We have now changed it to 15 to 20%. Similarly, on the cash collection, earlier we had given 12 to 18%. And knowing our market and the collection, what we are going to do, we have narrowed it down to 12 to 15%. On the cost front, we are on track on what we had estimated, and we are confident of fulfilling it. So we have not changed the guidance. We have narrowed it within the range.
All right. Thank you for your answers, and I hope you all the best for the rest of the year.